Good afternoon and welcome back to this Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it has been the day in the green and the week in the green as well. Second straight week where Nifty has managed to see about positive returns. And now that we have started with TCS earnings, it's the big AI plans and nearly a good Q2 results also set stone well for the upcoming quarters for the bellwether as well, and of course for the Indian IT as well. But yes, for the index level, let's take a look. Sensex up about 300 points, Nifty also up about 100 points, 0.4% gains coming in for there. 25,289, that is where we are at. We did reclaim of that 25,300 odd levels, but we are off the day's high at this point of time. But yes, coming to the sectoral indices, where it is and where we stand, it has been the day for the PSU banks, pharma and the pharma stocks as well, where Nifty Pharma and both the Nifty PSU Bank are showcasing a gain of about 1% each. However, IT index, like I was talking about, that has seen some profit booking today. After the entire week, Nifty IT has been up about 4% each as well. But yes, Bank Nifty also seeing good gains, 1% gains coming in for the Bank Nifty index, and it will be the fifth straight week for the Bank Nifty index to end in the positive territory if it ends so as well. But yes, coming to the gainers and losers of where we stand at this point of time, Tata Steel not doing well on the Nifty 50 charts, seeing a cut of about 1.5%, given that the entire metal packs have been seeing some profit booking today. On the other hand, if you look at JSW Steel, that is also showcasing a decline of about nearly 0.7%. On the other hand, you can see TCS Tech Mahindra, some of the tech stocks taking a knock with about 1% decline. Shriram Finance also showcasing a decline of about 0.6%. On the other hand, if you look at the losers, gainers for the Nifty 50, you can see Cipla towering gains with about 3% gains, SBI doing well with about 2%, given that the government has opened up the MD post for SBI to a private for the private sector as well. So we have seen some good gains coming in for the PSU Bank as well, and Nifty PSU Bank particularly today hit a 52-week high as well. Maruti Suzuki also doing well, 2% gains coming in for the auto index, and for the auto stock, Dr. Reddy's Lab doing well with about 1% gains, and Bajaj Auto and NTPC, some of the other gainers on the Nifty 50 as well. So all in all, it has been a good day for the markets. It has been a good week for the markets. Second straight week of gains for the Nifty, and so far this week also Nifty has gained about 1% as well. But yes, to understand more about markets and what the way forward looks like, let's quickly get on board with our guest of the show. We have Sandip Agarwal, fund manager of Sowilo Investment Managers, joining us. Sandip, just when the Indian IT was being blamed for missing out the AI boom, TCS has announced its AI plans and plans to build about 1 gigawatt data center. What do you make of this and the entire IT? Does it make it favorable?
Yeah, hi, good afternoon. So what TCS has announced is basically, I think is a better use of capital or better use of cash which they were generating, because this is something which they will have an edge over other data center providers who. So in data center, primarily you need two things, the real estate and the technical know-how. So, TCS and all the large IT companies have executed large campuses in past 20-30 years. So they have good expertise on making very good, construction quality, good quality, and where, data centers could be built. So that is one strength. On top of that, they have their technical strength also. So I think it is a remotely related line of business, because, the core IT services, as we have said multiple times, we don't see them to grow more than 5-7% in long term. And if there won't be growth, then you have only two choices in such a cash flowing business: either you return the cash or you invest in somewhere else where returns are good. So I think they have chosen the path to get some revenue growth from related line of business, and in long run they can keep on buying some small companies for different apps and build on capabilities in that AI and try to move towards backward integration. I wouldn't say they will do backward integration, because backward integration will need a lot of investment in the GPU chips. I don't know whether they want to do that today. So I would say that it is better than distributing cash. That is the way we read. But yes, a large part of this sector is now matured, and I think is X growth. So that is the way we look at the sector.
Okay, but what is the kind of growth that you're projecting for the IT sector in the upcoming quarters? Because we did see that TCS has reversed its, revenue decline that it saw in the past 3 quarters itself, and it's seen a modest revenue growth for this quarter. But for the upcoming quarters, does it speak well, or what are you projecting?
So, we run a PMS, so I don't project every single earnings and all. And basically, it is very hard to give a particular call on a specific company. But let me put it this way, that if you see any of the large IT company numbers, you have to see the year-over-year growth number. And I think the year-over-year growth number for most of them are below 5% or around 5%. And at 5% growth, stocks are between 18 to 22 times. So I think the PEG ratios are quite expensive. And going forward, as I said, the maturity of industry is very high. So super normal growth from here is very tough. Even double-digit growth for large caps will be very, very challenging. I don't see it happening in any of the 5 years on a CAGR basis. So in my opinion, for that kind of growth, you have to start looking at what kind of multiples you can assign. So maybe dividend distribution model or some other model, you have to come out and see what kind of implied P multiple. In my view, the P multiple 16 to 18 times is where the stocks can trade in the long term. So we want growth stocks, so we generally don't look very eagerly on this kind of mature sectors.
Okay, it's already matured sectors that you're talking about. But yes, Sandeep, let's get in your view on like what are you finding value in this particular market? Because we've just kicked off the earnings season, but anything that you're watching out for from the September quarter?
So, we are very positive for quite some time on the private bank side and even some names in the PSU bank. The reason is simple, that I think the worst of the news on the lending cost is behind, and growth will also pick up at some point of time. And this space has not done well for now 2 3 years. So lot of things are in the price. But we are very bullish because once now growth is decent and more growth comes in. RBI has also done a lot of structural changes. They also have given good rate cuts. So we believe, growth is bound to come. It is a matter of time, and NPS won't surprise negatively. I think we are not expecting very big credit cost in upcoming quarters. So I think this is one sector where big re-rating can happen, and we are very, very positive on the whole banking space. But we obviously buy something which we like more, so we have preferences within that, both in private and public. But broadly, we love the banking space. We love the manufacturing space a lot. A whole capital goods space where you are building the ancillary machineries are our favorite. Then we also love the platform businesses because there is huge technology operating leverage which is happening, and I believe that all the companies are now turning profitable. So big growth for longer is there. We also like water theme. So these are the four areas where we are very, very positive. And then premiumization, we love, expensive car distributorship. We love expensive watch distributorship. So those are the kind of business we love.
Okay. Sandeep, coming back to your point about that you like banking space at this point of time, we did have some reports which indicated that the government has revised some rules for the appointment of whole-time directors. Basically, for SBI, there used to be 4 MDs from the PSU space. One particular MD can be from the private sector talent as well. So, does this add to the sentiment, or what are you making sense of it?
No, I think, while the people who have been running for so long are very capable people and they have done a phenomenal job. You see the growth in earnings of SBI for last 3 4 years, it has been quite decent. But obviously, this kind of moves, it says that, the government is also looking at the investor interest and is much more receptive to the ideas and open to, make changes wherever required. So it definitely, shows that government wants even the PSU banks to function completely independently and in the best interest of the investor. So it definitely is a sentiment positive. But I think the bank itself is doing very good, phenomenal work, good growth, and I think it is really, really, very good in terms of value. So we definitely, look like the whole PSU space, within which there are some banks where credit costs are still high. So we have to wait and watch. But large part of the banks are doing well.
The sentiment then. Sandeep, let's also get in your view on CDMO stocks, because that did well today after the US approved Biosecure Act, and a part of the tariff news relief reports that has also kept the interest in the buyings in the pharma stocks quite relevant. So do you believe that the worst of underperformance in terms of market sentiment could be behind us?
No, see, in my view, pharma is one space where the impact of probably any kind of negative impact of tariff or any kind of challenges which we are facing in other sectors will be least, because pharma directly impacts the US consumer, and which will show up very quickly if the cost goes up in the wallets of the US consumer. So I think that space will always have an advantage, that it is very sensitive sector. So I don't see big negative in that sector coming in, and CDMO is a very very thematic thing. The growth which we saw in the auto side, the growth we saw in software services side, I believe that CDMO is the space where we can see structural growth for next 5-7 years. The only challenge is their stocks have run up too much, and they are pricing in too much of the positives. So you have to buy them on a bad day, not on a good day. So that is the way we look at it.
Okay, bad day, not a good day. All right, let's get into your view on metal stocks also, because today they're seeing some profit booking, but for the year gone by, metal counters have done quite well. What do you believe? I mean, with interest rate cuts on the horizon, do you believe that all the setup looks quite favorable for the metal counters? And is there more run up left for the metal counters?
See, in metal, basically, there is a lot of correlation with the dollar index also, and we have seen it's supporting a lot recently the commodity thing, the metal space. So, in my view, we will see once Fed rate cut comes, which I think will come in next 2 quarters. When that happens, then probably we'll see some more pressure there, and when that happens, then probably metals will rally more. But see, it is a deep cyclical sector, and very very volatile. For people like us who invest public money, it is very tough to take those kind of calls. So we generally don't like to play directly metal. We try to play quasi metal, something which is being made by using those metals. So we try to hedge ourselves by doing that. So we play the first or second derivative of metal and not directly metal. That is the way we strategize on our portfolio.
Okay. All right. Sandip, we had an interesting Amphi note also that came in today. I mean, after falling 22% in August, net inflows in the equity MS declined for the second consecutive month. What do you believe can revive the sentiment?
No, so it is a known fact that if you see last 1 year, index itself has not made much money, and in fact no money, and mid cap and small cap are also broadly in red. So whenever for a long period of time markets don't give return, we have seen that investors starts rethinking for the discretionary allocation. Although SIPs generally we don't see much people stopping, but obviously the incremental SIPs do reduce, and all those things we have seen in the past also. So until markets starts giving some return, that money may not come very aggressively. But at the same time, I would also suggest to look at the overall money which is coming. So you have to also add the money which would have come in the gold and silver ETF. And I am sure that if you do that math, then it will be better than previous months. So in my view, there is a limited amount of money which could be allocated by retail and by the individual investors, and they do allocation. So they will prefer something which is doing well. So gold and silver has been doing well for quite some time. So obviously their bias will be there, and so they will allocate something from their equity portion to the metal portion, the precious metal part. So I think we have to see holistically. Whenever equity market starts giving return, a lot of money will come back again. I am not too much worried about it. It is a good amount of money which is coming already.
Okay. But what about for the mid cap and small cap? I mean, they did receive a lot of traction in the month of September itself. But from an earnings perspective, how are you viewing both of these pockets?
So I think if you see last few quarters data, also mid cap and small cap earnings have been better than large cap. So we generally always have mechanism where we see the PEG ratios rather than anything else. On PEG ratio basis, we will prefer mid and small cap because that is the place where growth will be much better, much faster. And we continue to prefer mid and small cap, although we love some of the large caps also, particularly in pharma, oil and gas, and some places where growth is good and stocks are very at very attractive value they are available. So we buy mix and match of both. So we prefer both the spaces, where we are not only large cap fund. We run a multi cap kind of fund where we are agnostic to the movements.
Okay. Let's also get into your view on the auto sector, because that has seen a relevant rally after the GST reforms were announced. But from a consumption theme basket, what are you most bullish on, and do you expect the rally to extend going from here on?
See, we believe that consumption is again like IT sector, which is very defensive in nature, and it is a quasi cash. We generally don't want to be in those sectors because structurally, I believe that, if you see our population growth rate is consistently falling, and also, yeah, so because of that, the volume growth will be very limited going forward. Whatever growth will come from price increase, and it has its own limitation. So we will not be, willing to buy something at 40-50 multiple for a 5-6% revenue growth and maybe 7-8% PAT growth. We are not very keen on those names. Even if you have to buy defensive or quasi cash, we will buy something else, but not the very expensive consumption story. So, with the reforms which government has done, whether on the GST side or income tax side, we will see good numbers for a few quarters. But still, those good numbers also, those stocks are very, very expensive and don't suit our philosophy. So we generally avoid the expensive names.
Okay, okay. Sandeep, what about the capex themes? Your defense, railways, all of these counters. How do you see their valuations at the current juncture?
So we love the capex theme, and I believe that capex themes will all do well. We generally try to play the capex theme through companies which have multiple customers and the client concentration is not high. We would generally not prefer to have too much of stocks where there is one or two client, and so basically we try to play uh, uh, capex where private capex themes more, and we see a lot of companies in the the power utility side, the cable side, the wire side, and a lot of other ancillary, the shade side, the structural side. So all there are a lot of companies which are available at reasonable multiple, and they are doing phenomenally well, and well spread client base. So we would generally prefer to buy them.
Hmm. Okay, but anything that you are a little cautious about at this point of time? I know you mentioned a whole host of sectors that you're bullish on, but something that you're still cautious and want to remain on the sidelines?
So we are very cautious on consumption theme because the peg ratios are very, very high. We are also cautious on the large cap IT names because the peg ratios are very high.
Okay, okay, okay. Sandeep, we have had some talks about Modi dialing Trump for Gaza peace plan success, and then we've had US Treasury Secretary saying that India would buy more US oil and less Russian oil in the coming months. In the past 3 days, we have seen some FI buying also take place, although in some small quantities. But all in all, in this structure, what do you make sense of this? Some positive sentiment coming in from there?
The India-US relationship is very strategic for both the countries, and I believe that we may have some rough patch in between, but over a period of time, maybe in next 15 days, 1 month, 2 months, you will see both the countries coming together and resolving. When such large companies and large stakes are involved, you cannot expect positive outcome on day one, and I think both the leaders are great. So basically, I believe that there will be a resolution of the issue very soon, and once that resolution happens, this tariff rates which are 50% will also go away in my view. We will again see maybe somewhere between 15 to 25% the settling in those levels, and I think even FIs are cognizant that this cannot continue for long, and I believe that soon there will be a resolution, and it will be good for both the countries.
Okay, but then when do you expect this meaningful FI reversal to take place? Because we've seen good activity in the primary markets, but looks like they left out of value buying in the secondary.
FIs are primarily waiting for two things. One, earnings growth to come back because 2-3 quarters have been very painful in terms of earnings growth, and since then there is no returns in the market. And second, I think they have to see their returns net of currency impact. So until unless they see 11-12% earnings growth or 14% earnings growth, they would probably be on sidelines. But I think we have massively underperformed the emerging market basket. So sooner or later, money will chase markets which have underperformed, and we will be biggest beneficiary of that.
Okay, so does this mean that for a medium-term investor, it's time that they can rest their bets on gold ETFs or silver ETFs, and for that matter, even IPOs?
So, as a portfolio manager, I will say to have all the asset classes based on your risk appetite and have some portion of everything. We generally never recommend to buy only one asset class because at different point of time, different asset classes do well. So when you run a mixed portfolio, you will always see every year something would do good for you on overall portfolio basis. And we ourselves believe in that. And I also invest my own money in the same fashion. So I would always recommend to not go all in one particular asset class, have a mix portfolio of all the asset classes. Depending on your age profile and your risk appetite, you can obviously have more and less weightage in one versus the other.
Okay. But with Nifty embarking with this 25,300 mark, when do you expect Nifty to once again reach all that all-time highs? Because we're expecting earnings to reverse from say, third quarter and fourth quarter onwards. So does this mean that some buying would take place before the results have been announced, at least in January onwards?
So, we were very bullish that, before September itself, Nifty should make new high because of the sharp cut which RBI gave on the interest rate and other things falling in place. And then, this tariff suddenly came in at 50%. So, because of that, we started facing some challenge. But I think now, again, things are falling in place. This GST cut is a very, very structural reform. So, in my view, that may not be September, may not be October, but sometime, next 1 or 2 months, we should see, Nifty going to the old level, because now earnings growth should also come. In this quarter, we are not expecting substantial jump in earnings growth, but at least the commentary will be very, very positive, and that will give clear indication that from next quarter onwards, we will see good growth.
Okay. So does this mean that this would also mark the end of the earnings downgrades that we have seen? Because we're expecting single-digit growth, but last 2 quarters we have seen that there's a lot of pain, which when it comes to EPS upgrades as well. Do you believe that this quarter could mark the end of the most of the earnings downgrades across the sectors?
So I believe at an overall Nifty level, we may not see much cut this quarter, maybe 1% or so. But within that, there will be some sectors where there could be deeper cut, because the analyst will always be and the management will always talk what the current situation is. That and today's current situation is that there is 50% tariff on some of the sectors, so which are not under the exempt list. So basically, those are the places where both the analyst and the management will take a more cautious view. I think within the sectors there will be some cuts here and there, but overall basis, I don't see sharp cut. I think the worst on the cut side is definitely behind. The guidance and outlook will look much better from this quarter.
Okay, all right. That is what we need to watch out for. That is the guidance and the way forward as well. But with that, we have to let you go, Sandip. Thank you so much for your time and joining us.
Thank you. Thank you so much. Yeah.
All right, let's take a quick check of the markets of where we stand before we go to our technical expert of the show. We can see that Sensex is up about 300 points and Nifty is also doing well with about 25,300 mark, nearly 25,300 mark at this point of time. The market breadth remains quite buoyant with the advances taking an upper hand at this point of time, and sectorally, it has been the day for the pharma and the PSU banks because both of them are still holding up well in the green and well and steady in the air with about a percent gains as well. But yes, Nifty IT index that has remained range bound for the majority part of the session after the TCS Q2 results. It was a beat across all our metrics, but the street has been quite watchful on the company's big AI pivot of establishing a 1 gigawatt of a data center, which basically captures about 15 to 20% of the entire country's capacity plans as well. The street will also be watching out for its upcoming acquisitions as well, because the company has mentioned that they will be planning out some aggressive acquisitions in the upcoming quarters as well, which is unlike of what TCS has done in the earlier quarters as well. But yes, apart from Nifty IT index, let's take a look at some of the other sectoral indices. Nifty Auto has been holding up well, 0.4% gains coming in there as well. Consumer durables after yesterday's profit booking once again up and resilient with about nearly a percent gains. Mid cap and small cap indices, both the broader end of the markets, have been holding up quite well. If you look at small caps, they are showcasing a gain of about 0.7%. Mid caps are showcasing a gain of about 0.5%. So both of the broader end of markets have been outperforming the frontline indices at this point of time. With that, let's quickly get on board with a technical expert of the show. We have Milan, Vaishnav, founder and technical analyst of ChartWizard, joining us. Milan, Nifty is expected to end this week with about 1.5% gains. What is the next levels that we can track as we go deep into the earnings season?
The thing is that it's not about this week staying into profits or not, but what I'm concerned about is that first of all, to come to your first query, 25,500 is what we can certainly expect. Looking at the way the OI is shifting, we have 25,000 levels, which has continued to accumulate highest put OI, and below that there is very negligible writing of calls. So, in case of any downticks, 25,000, 25,100 can stay as a major support on the upside. the highest call OI has shifted higher, and therefore we can certainly expect this being said, what I feel that, or rather, what is important for us to know that Nifty is in a very large symmetrical triangle on the higher time frame charts as well, and we are moving inside the apex of that triangle, and therefore we are in for a sharp move on the either side. At least that's what we can say. And one more thing I would like to add that we are at one of the lowest levels in terms of weeks. So this kind of prolonged phase of complacency is also something that we need to watch out for. But yes, to cut the long story short, 25,500 is what I expect on the charts.
Okay, 25,500. That's quite a bullish chart that we can watch out for. But yes, let's move on and talk about Bank Nifty Index. Did well this week, and particularly for PSU banks, that saw some traction there. SBI hit about fresh 52-week highs. But yes, Milan, what do you make of the sentiment? Bank Nifty up and running for the fifth straight week now.
Yes, I expect this relative outperformance to continue in terms of Bank Nifty. I expect that it has got some room on the upside as well. 57,500 is what you can at least expect there also, because if Nifty is heading towards 25,500, the corresponding levels and also the technical levels point towards 57,300 to 500 range for Nifty Bank.
Okay, but anything that you're liking from this space? So we have some results which will be pouring in from next week also. We have HDFC Bank, Kotak Mahindra, which will be reporting results over the weekend, next weekend. That's what I mean. What are your top picks from that space?
From the banking space, see, I won't be focusing from the fundamental aspect, but from what is getting flagged from the technical structure. I think SDFC Bank from the private banking space and SBI from the PSU space are likely to do well over the coming days.
Okay, all right. Those are the stocks that we need to watch out for. But yes, for this week, IT index, one of the clear outliers. TCS did see some profit booking today, but the company saw a beat second quarter on across all metrics. We'll watch out for the close, how we are closing. But of course, Nifty closing in on good gains, 100 points gain coming in for the Nifty above that 25,282 mark. 0.4% gains coming in for Nifty at this point of time. Sensex also doing well with about 300 points gain, nearly 0.4% gain coming in for Sensex as well. If you look at the Bank Nifty index like we were discussing about earlier, the charts remain quite resilient, 0.7% gain coming in for there as well, up for the fifth straight week. And the mid-cap index continues to shine with about 0.4% gain. Small caps also doing well. Clearly, the outperformer of the day as well. Small caps were showcasing a gain of about more than 0.5%. On the other hand, if you look at the other sectoral gainers and losers, Nifty IT index has ended the day in the red with about 0.1% decline. TCS has also ended the day with about a percent decline at this point of time. If you look at Nifty Metal Index, that has seen some profit booking, 1% decline coming in for there as well. And if you look at oil and gas has also taken a setback today. But yes, what did well, that was your pharma and the PSU banks with about 1.5% gains. And Realty Index also stood out as an outlier with about 2% gains. But yes, India Wix still continues to remain at comfortable levels, and top gainers on the gainers and losers on the Nifty 50 include from the gaining pack we can see SBI doing well with about 2% gains. Cipla also holding up well on the charts, 3.5% gains coming in there as well. Maruti Suzuki showcasing a gain of about 2%. Dr. Reddy's Lab, Adani Ports, some of the other gainers on the Nifty 50. But yes, let's take a look at some of the losers on the Nifty 50, how they are stacking up. You can see Tata Steel not doing well with about 1.5% cut coming in there as well. TCS showcasing a cut of about 1%. Milan, let's get your view on TCS. Some profit booking today, but the company was beaten across all metrics. What do you see on the charts going ahead?
To answer this, I'll begin with the Nifty IT Index chart itself to begin with. And Nifty IT Index on the weekly time frame has now bounced off its 200-week moving average for the fourth time in last couple of months. And so that speaks of the kind of bottoming out process that we are seeing in the IT space. Now, talking about TCS in particular, the stock has been defending its most recent swing lows despite weak markets, the way we had a couple of days back. And that is also in line with the CNX IT index, the Nifty IT index is in the phase of bottoming out as well. So I believe TCS might have seen some minor profit booking itself. It might, stay like this for a day or two or maybe couple of days. But by and large, I feel that a major base is in place with TCS, and one can expect improved relative performance going ahead from here in TCS.
Okay, all right. But let's also talk about pharma index, because that was one of the clear outperformers today. Anything that you're watching out from the pharma index space? Because we've seen some news on tariff relief reports. Today, some of the CDMO stocks also did well. What do you make of the sentiment?
I have no particular picks from pharma, but I think some of the laggards which have underperformed over the past multiple months, I will call it, like Sun Pharma, it's likely to do well. Along with that, I also expect some traction in Lupin and Glenmark.
Okay, Lupin and Glenmark, some of your picks. Okay, let's also talk about FMCG pocket. That particular pocket saw some pressure this week. Milan, what do you expect the momentum to continue? This sideways momentum is expected to continue at least in the next week?
I expect sideways momentum in FMCG. I don't expect it to show any kind of a trending move on the upside. I don't expect it to lose rapid ground as well. I expect that by and large, the FMCG space is likely to remain ranged, and we would see it outperforming only when the markets in general are not doing well. Otherwise, I expect it to stay subdued.
Okay. Expect to remain subdued for the FMCG pocket. Let's discuss about stocks in focus then. We'll talk about Tata Elxsi first. The stock did see some pressure today, 3% decline coming in after it reported its results today. And brokerages, they were not quite enthused on the performance as well. But yes, what's the outlook from here on now? Today, the stock has seen some negative reaction, Milan.
No, that's fine. But overall, since the month of June, the stock has been on a falling trajectory. It's been under a corrective decline. And all the up moves that we have seen so far in Tata Elxsi since the month of June have been just the counter trend up moves. And it has continued to, resist to its 50-week moving average on each such technical rebound. So I expect this downward trajectory to continue, and we would see some good traction coming in Tata Elxsi only after it moves above and sustains above 56.50. As long as it is below this point, don't expect much from this stock.
Okay, all right, let's also talk about Tata Communications because that stock surged about 17% into trade today. Good volumes that the counter has seen, given that TCS announced that big data expansion plans as well. 10% gains coming in for Tata Communications. How does the chart look like going ahead, Milan? Can the momentum sustain?
Yes, momentum can sustain, albeit with a bit of some consolidation that might happen because of the kind of rise that we saw today. But by and large, yes, I expect the stock to head towards 2000 mark.
Okay, 2000 mark, that's quite a bullish target that we can watch out for. But yes, let's also talk about Tata Motors, another Tata Group company, since we are talking about it. That stock did snap its 5-day losing streak today and did well. But yes, next week we have the demerger between the passenger and the CV operations. Milan, where do you see the charts going from here on for Tata Motors?
To be frank, I don't see it going anywhere because since the month of, say, almost June or maybe early May, mid of May, the stock has been trading sideways. It's been trading in a very narrow and very defined trading range. All of the DMAs are in very close proximity with each other. That shows that there have been no trend over the past many months. Right now, the thing is that the stock trades towards its lower edge of the trading range. Now, this is an isolated technical view. Now, we have to read it along with what demerger holds for us. So, speaking of Tata Motors, I don't think we should be doing anything now. We need to have demerger out of our way, and from a technical aspect, we'll have to wait for the stock to go above 700, 720 zone. Only after it goes above that and sustains above that, we could expect some upside momentum. Otherwise, we have to wait until these levels are there on the screen.
Okay, all right. Some sideways momentum could be expected for the company. But let's shift focus and talk about Yes Bank, because that stock saw good traction today. 7% gains, that is where the stock has settled at. And it is the best weekly performance since May. The stock is up over 10% for the week so far. What can we expect next moves and of course the next target that you can watch out for, Milan?
See, if we Yes Bank, the stocks like Yes Bank, Vodafone Idea, Ola Electric, these are the kind of stocks they don't run solely on the price action. I mean, on the technicals or solely on the fundamentals. Lot many things surround it, news flows, external developments. So personally speaking, I don't much follow Yes Bank, but I think 24, 50, 25 at max could be expected at that point in time. I would of the opinion that even the medium term investors should use this kind of up move to at least partially lock in their profits, if any. Because beyond 2025, from an immediate short term perspective, it would amount to chasing the up move, which I think should not be done. So no major outlook on Yes Bank, maybe 24, 50, 25 you can expect. And fresh entry, I would not suggest anyone making this because it's now quite steeply overbought. So that's what my take on Yes Bank is.
Okay, steeply overbought. That is where Yes Bank is. So no fresh investment is advisable at the current levels. Let's take another stock in focus. That is your ICICI Prudential Life Insurance. That stock did well today. The company reported its pre-quarterly update where we saw that they have seen a 6% increase in the new business premium for the month of September quarter, and APA has been down, however, with about 1%. Today, however, the stock did well, but the stock has been stuck quite in a range. Milan, what can we expect the next moves to be? Can the consolidation continue?
I expect that the consolidation will continue because the stock has got multiple overhead resistances to deal with from the current levels until the levels of 625. So if I see in form of pattern resistances, in form of DMS, there are at least 4 to 5 hurdles that we can have that I can see between the levels where it's closing right now, that is around 597 to 625. So I expect that consolidation might continue, and a trending move can be expected from ICICI Prudential only after it crosses above 625.
Okay. Let's also get in your view for SBI Life and HDFC Life as well, because we did have a report which showcased that, it showcased that the private players have experienced robust growth, but LIC witnessed a decline. So basically their AP has increased about by a moderate of about 7.7%, whereas LIC's AP has fallen about 3% on a Y-on-Y basis. But yes, SBI Life, HDFC Life, how do they look on the charts? YTD they have been outperformers.
Yeah, there have been outperformance, but I would be of the opinion that none of the two stocks, whether it's HDFC Life or SBI Life, have been able to clear their recent highs in a very clean way. They have retested their highs, they have marked incremental high point as well. But by and large, a clean move on the upside has continued to elude both of the stocks. That is point one. Point two, even if you have to choose any one out of these two stocks, even the relative strength is completely inconclusive in nature. So by and large, I think that it's the time that we move out of the such stocks, take money somewhere else, and come back only after they are giving us a meaningful new highs.
Okay, all right. Let's now shift focus to Natco Pharma, because that stock did well today after the Delhi High Court paved for the launch of SMA drug as well. But the stock has been stuck in a lower band at this point of time. Today, however, the stock did well, 4% gains coming in for the counter. But Milan, what is the next move that we can watch out for Natco Pharma?
Nothing much. I don't see any major upsides coming in Natco beyond 880, 900 odd levels. That's it. There are no signs of any base formation as yet. It continues to remain under a multi-month decline. No reversal signals at yet. So we could expect some upsides, but they are likely to stay limited in range and their extent.
Okay. Let's also talk about SpiceJet, because that stock did well today. 5% gains came in for the counter after a news update that it has added about 3 new aircrafts to its operational fleet. Yesterday also we saw good volumes on the counter. Milan, what are you expecting for SpiceJet? It largely underperformed so far this year.
Yeah, it is likely to continue to overall underperform because it made its high point of around 79.80 in September last year. And since last 12 months, almost, it stayed under a declining trajectory, under a secular decline. All the up moves that we have seen were just the kind of counter trend up moves, and the downward trajectory on SpiceJet continues. So I don't see any major signs of a trend reversal taking place in SpiceJet. For that to happen, the stock will have to move past 37, 38 levels. Once it does that and stays above that, only then it would deserve some attention. Otherwise, I mean, what I am seeing right now are just the counter trend up moves within an overall large declining trend.
Okay, all right. Let's discuss one more, small cap stock, that is your BGR Energy, because that stock hit over a 13-year high of about 336 rupees in today's trading session, and the stock was also locked at about 5% upper circuit as well. Milan, any thoughts on the counter? What is the next level that we can watch out for?
No, Lovisha, unfortunately not, because the stock has been going up in circuits. It's in uncharted territory, something that I have not been tracking so far as this stock is concerned. So I have no much view to offer on this.
Okay, okay. Milan, just last question before we let you go. What are your top picks at this hour? Anything that you want to highlight right now?
I would stick to the large cap universe. I would be looking at Bharti Airtel and L&T for next couple of sessions.
Any levels that you want to highlight for both of them?
Yeah, it could be bought at current levels. I mean, when they open on Monday, you can buy that. Bharti has closed around 1940 odd levels, so now you can buy at current levels. Expect around say 2100 on it. Maintain a stop loss of 1875. That's what I have for Bharti. L&T again, it could be bought at open. Expect around 3950 to 4000 on the stocks. On the stock, and approximately stop loss could be placed at around 3700.
Okay, all right. Those are the two stocks that we need to watch out for. But with that thought, we have to let you go, Milan. Thank you so much for joining and connecting with us.
My pleasure. Thank you so much.
All right. Now let's go across to my colleague Yatin Mota, who is joining us from the Mumbai studios, where we do discuss further about how the market breadth and the stocks that did grab the headline. Yatin, good afternoon. Breadth of the markets positive for the week, and we ended up % higher.
Yeah. Absolutely, and most importantly, the week ended on a positive note, and if you look at the news flows, they have turned positive. If you look at the Sensex, 300 points up, Nifty 100 points up, and advance decline ratio better than yesterday, almost 2:1. Clearly, we had TCS among the IT pack sulking in trade, but nothing to worry. The management commentary was good, numbers slightly better than expectations. In fact, brokerages went on to increase prices of target in TCS. But yes, it was a weak day for IT, almost ending on a flat note, the IT index. However, PSU banks, real estate, pharma shares rallied anywhere between 1 to 2%. So across the board, we saw some good buying coming in, especially if you look at the mid-cap index that surged almost 0.7%, gaining by almost 130 points, talking about the Nifty small-cap index.
All right, all right. Let's talk about the individual movers of the day, and expanding on what Yatin was just talking about. We'll first talk about the TCS. The stock did come under pressure today, but still managed to post weekly gains of about 4%. Now, the company did report modest revenue growth in the September quarter after seeing 3 quarters of decline, and margins also expanded from a sequential basis, but the restructuring costs and job cuts of about 6,000 dented its bottom line. Remember, TCS had announced about 12,000 of job cuts, out of which it went ahead with 6,000 as well. But yes, the IT bellwether has announced massive AI push. The company does plan to build about 1 gigawatt of AI data center in India, and that is about 15 to 20% of the entire country's capacity. Plus, it has also announced a new acquisition, which is quite rare for TCS, to enhance its Salesforce practice and AI capabilities as well. Going ahead, the street, however, has given out a mixed verdict. If you look at Goldman Sachs, it has given a buy call with a target price of about 3,300 rupees. They like the bold AI move. On the other hand, if you look at CLSA, they've also given out an outperform call, target price of about 35.59, and they're quite impressed with the beat revenue and margins and the deal wins that the company has showcased as well. On the other hand, if you look at Avendus, they are super bullish on the counter, and they've upgraded the counter to buy and a target price of about 3,700 rupees, where they believe, and they've called the AI data center quite highly potential. And they've also maintained the revenue and EBITDA margins estimates for FY26 and 27 as well. But some remain quite cautious, because we've seen Citi giving out a sell call, saying that the growth abroad looks quite tough. Nomura saying a neutral call, Jeffrey is also giving out a whole call saying that there could be some limited synergies between the Indian IT and data centers as well. So it looks like, all in all, the street verdict has been cautiously optimistic going ahead for TCS as well. Yatin, this could be a fresh page for TCS because overall we were seeing that we were blaming Indian IT for missing out on that AI boom.
Absolutely, and I think along with TCS, Tata Communications stock also moved in trade because TCS announced a big plan in the data center business in which they are looking at capacity of almost 1 gigawatt and probably a multi-billion-dollar opportunity across the chain of data centers, which could probably benefit group companies like Tata Comms. That was up almost 12%. But Lovisha, since we're talking about IT, another defensive sector is pharma. And that was in focus after the US government, which is the Senate, passed order regarding the NDA Act, which is the Defense Act, under which there is a Biosecure Act embedded. Now, brokerages believe that because of this, the dependence on Chinese supply chain for US will reduce, which will have a positive impact for Indian CDMO players and CDMRO players. Now, we have the contract manufacturing and contract research business, which is quite large in India, and stocks like Divi's, Syngene, Piramal Pharma, all of them are expected to benefit. In fact, Macquarie has said that the pharmaceutical supply chain is shifting away from China, and particularly Indian CDMOs with small molecule exposure will benefit because of the move which has come in the US. Also, they talk about Divi's, Cohance, Syngene and Blue Jet being their stock ideas, among which Divi's is their top pick. In trade today, Divi's was one of the top FNO gainers. In fact, Divi's gained almost 6% in trade after this positive news flow, which has come in for the US markets.
Okay. Yesterday, some reports of tariff relief, and today the Biosecure Act getting approved. Good news coming in from the pharma index, from the pharma front as well. But yes, let's talk more about the Q2 results, and that was your Tata Elxsi, because that stock came under pressure after reporting its Q2 results yesterday. The company did report an inline quarter, but brokerages weren't too impressed by the quarterly performance. If you look at specifically at the numbers, constant currency revenue growth, we did see a growth of after 2 quarters of decline on a sequential basis, and EBIT margins also saw a slight about 30 basis points of expansion compared to the June quarter. If you look at business segments, media vertical that led the growth, while transportation and healthcare that fell. However, the street has been quite cautious. We did see Avendus giving out a sell call on the counter. They've also trimmed the revenue estimates for the current and the next financial year. Even Kotak has also maintained a sell call, and they've said that while revenue was good, but profitability was quite weak, and as a result of which they have forecasted about 5.4% CC decline of revenue for FY26 as well. If you look at another brokerage firm, JP Morgan has also gone ahead with an underweight call, saying that the US market remains quite weak despite some recovery which was seen in Europe, Japan and Indian markets as well. So yes, all in all, brokerage verdict has been quite weak.
Global macro picture, once it improves, there could be some relief on Indian IT. But yes, as of now, it seems like market has been looking to eagerly book profits or just exit from select IT stocks.
That's right. Now, since we have talked about pharma, IT, all of them, all the stocks which were gaining limelight today, let's also talk about PSU banking stocks, because we did see Nifty PSU Bank hit a fresh 52-week high today, and it was one of the top sectoral gainers as well, with about 1.5% gains that came in for the counter. And among individual stocks, we did see SBI. That stock also hit a new 52-week high. And apart from SBI, Canara Bank, UCO Bank, Indian Overseas Bank, all of them surged in the range of about 2 to 5%. Now, this came after there were certain reports from the government where they have, for the first time, opened the doors for private sector talent to take up an MD role at SBI as well, given that this is the first vacancy which could be likely when Ashwini Kumar's term ends next year in January as well. Under the new rules of the government, the candidates must have at least 21 years of experience, including 15 in banking, along with some board level or some senior leadership exposure. So all in all, it quite bodes well for the entire PSU lenders as well. Yatin, we've seen PSU banks taking center stage, and in the past 5 years, the stocks have re-rated as well. The current moves definitely shows that there is much more flexibility that the government is willing to make it better.
Absolutely, and the recent RBI reforms, probably the government working on how really to improve FII and FDI participation in the PSU bank is something we will watch out for. But yes, the overall health for PSU banks has improved over the years, and now probably the government looking to further liberalize the entire PSU banking stocks, as well as the rules which needs to be amended.
That's right. All right. With that, that's all the stocks we have for now. But yes, markets have ended the day in the green, and we'll watch out how next week pans out. More earnings will get reported. We have HCL Tech, Axis Bank, HDFC Life. All of this stock-specific action could continue in the next week as well. But yes, for now, it's a wrap from this edition of Closing Bell. But before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, chart related patterns and AI powered stock alerts right on your WhatsApp to help you invest and trade with confidence. You can download the Moneycontrol app and subscribe to Super Pro today itself.